Hello my viewers around the globe, welcome to my channel. In this video, I'm going to show you how you can use leverage in future trading. So just subscribe and click on the bell icon so that you don't miss any video from Simo Crypto. So with that said, let's learn together. Leverage in future trading is one way, the best way to make money, because it can bring a lot of money in just little time. But at the same time, it can take a lot of money. I mean, you can lose a lot of money if at all you don't know how you can use leverage. So in this video, you will learn exactly how you can do do's and the don'ts in this video. So the first question should be, what is leverage in future trading? Leverage, it means you're borrowing money from that exchanger that you're using to add up on the capital that you're having so that you can maximize your profit. So when you come on any exchanger that you're going to use, you'll find two things. Sometimes they can differ depending on which exchanger that you're using. There will be isolated or cross. So when you choose cross, in simple terms, suppose on your account you have 200 as your capital and you decided to use 100 in one pair that you want to trade. So it means when you reach on the liquidation price I mean, when you come here after making a trade, you find here a liquidation price. This liquidation price that exchange has indicated to you, once it reaches there, everything that you have borrowed, it means you have failed. Everything will be taken on your account. So when you are in cross trading, when they reach on the liquidation price that they have indicated there, it means everything on your account will be taken. I mean 200 will be taken. But when you decide to use isolated, once it reaches on the liquidation price, it means they will only take that amount that you have put on that specific pair. Let me say maybe you use it BTC stroke USDT. So they will only take 100 that you have used in that pair. So always try to use isolated in case you want another money to be on your account. So this is the leverage that I'm talking about. Like this one, the leverage from here moves from 1x up to 125x. So this means that if you decide maybe to use 50 leverage, let's say we have on our account $100, they will multiply 50 times 100 that you have. So it means on your account, you'll be trading using 5,000 instead of 100 that you had at first. So that is the leverage that I'm talking about. So if you decide to use maybe 24, they will use that 24 times the amount that you have on your account. So that one will be the capital that now you'll be having to trade. When you decide to use a high leverage, it means the liquidation price will be also very high. Leverage works like this. Suppose you have selected that now you want to use 13x and you are using BTC USDT. They will multiply that amount of the percent that it has made that specific pair to the leverage that you have used. Let's say that it has moved 2%. It means they will multiply that percent into 13 leverage. That means you will have made 26%. And the person who is not using leverage will have made 1% maybe in spot trading. So that is the good thing with trading with leverage. They always multiply your leverage times the percent that pair has made. Another thing that you have to understand, in leverage, let's say maybe you have selected 50x and now it makes 2%. That means you will have gained 100%. But now the problem here, the percent 100 will not be the percent for 5,000. It will be for the initial amount that you had on your account. So you can ask yourself, if at all it's like that, then why should I use the leverage? So remember, the pair that you selected has only moved 2%. But right now, you'll be having 100% after selecting that 50x. So for you, on your initial capital that you had, instead of getting 2%, they will be giving you 100%. So if you had $100, that means you'll be having $200 on your account per now. And that amount, even you can make it within just a specific little time, maybe an hour, even less than that. So it depends. When you understand how to use leverage, automatically everything will be simple for you. But remember, the same way you have made 100% in 1 hour might be less than an hour. So it means in case the price goes down, maybe you have predicted that the price will go up and now the price start to decline. It means if it declines 2%, you will have made a loss of also 100%. That means you will have lost that 100%. All your money will have been taken. So you have to be keen when it comes to leverage. You have to understand exactly how you can use leverage. That's why I'm trying to explain to you all those things that you have to understand. Another thing, don't use high leverage. High leverage, they always very risky, because whenever you use a high leverage, also your liquidation price will be high. So it means you will lose a lot of money. But when you use at least like 10, it depends which coin that you're trying to use, but always don't go beyond at least 20 leverage, and make sure you are always accurate when it comes to leverage. Another thing with leverage, always make sure that you set your stop loss and take profit. This is where you're going to take your take profit and stop loss. Here I mean, let's say maybe you believe that the price is currently right now on $28. Maybe you expect that the price will go up to $30. You have to put here your take profit. Your take profit should be 30,000. And now the stop loss. Now remember, you have entered from here. So in case the price goes down, you can say that if at all it goes down and it reaches might be on 27,000, that means you should take all the price. So you come here and put here 30,000, and here you put 27,000. So if at all you want to learn more of future trading, I have made a video on this very channel on how you can use future trading in advance. So go on this very channel, watch that video, you will learn more of those things and make money in advance. So that's how you can make the take profit and stop loss, and make sure always it is there, because if at all you don't set it, that means you will lose a lot of money. Another thing, don't be greedy. In most cases, you can predict that maybe you're going to go to 30K. When it reaches there, then you change the take profit. You say maybe it will go up to 32. When it reaches there, you say maybe it will go to 35. And it doesn't reach there and it starts to come down. In most cases, people pretend that it will come back. It will come back until you lose the whole amount that you, even the profits that you had made. So always don't be greedy. Make sure that the amount that you have made, leave the trade and you go for another trade, because always there is a lot of trades that you can make the same amount that you have made in that pair. So on leverage, it is the same. Here you will set the price, you set even the size of the market, how you want to enter. Do you want to go by 78, 7, or you can even go for 100? This is where you're going to put the amount of money. You can even put the amount, or you can use the percent. So once you have selected that and you have put your take profit, then you can buy long or sell short. Here, in buying long, it means you predict that the price will go up. And when you predict that the price will go up and start to go down, it means your money will be taken. So when you say, I'm going to sell short, that means you're predicting that the price will go down. So in case you predict that the price will go down and now it start to go up, it means your money will be taken. So you have to understand how you can buy long and how you can sell short. So hope you have understood everything in this video. Please subscribe and click on the bell icon so that you don't miss any video from Simo Crypto. With that said, bye. Good luck.